Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. December 21st, just a few days left to go before the big guy comes. Man, it's been an interesting week. Actually, all December I think has been quite interesting, to say the least. We have some news coming out later today. We have a speech from the president later on, I believe at 2:30. I think is when that we've gotten that notification. But we'll see when it comes out later today, kind of the specifics of it and really where it leads the markets. Markets have taken a very interesting turn thus far today, particularly the indices. When we had our broadcast early this morning, we talked about really kind of a potential downturn in the market, but then at the same time, the potential for some good news. And we did. We got it. We went down from the open. We hit that common reversal time at 10:30, and we've had quite the reversal this morning so far. So some interesting kind of setups out there for the day, and we will kind of break into that, and we'll go from there. All right. So with that said, let me go into. I got so many monitors up. I gotta click the right one. There we go. For those of you that are new, every week we have a couple new people in there, and it's awesome hearing you guys. Also every week I get a couple emails from people, and I love getting the emails. I'll give you guys my email address at the very end. I've been trading since about 2000, so I hate to say, I mean, it's like saying 20 plus years is just, I don't know, like you're like, wow, 20 plus years, that means I'm old. Yeah, I guess I'm old. I guess I'm officially old, but I actually do have an updated version of this picture, although Santa Claus is in the middle of it. And yeah, it looks pretty funny. You guys will laugh. I'll have to do a side-by-side for those regular viewers out there. It's pretty hysterical. But, ended up basically just starting like many of you, retail traders out there, and didn't have a father that was a floor trader or anything like that. So I had to kind of learn on my own. I went to seminars over the years, numerous books. YouTube didn't exist back then. Gotten to see two different, major bubbles, the Y2K, everything, started with stocks and traditional options, found Forex, fell in love with that market, learned futures, became a financial advisor, realized very, very fast that world was not what I thought it was. It was not about analyzing charts and helping people. It was just about acquiring assets for firms. Did learn a lot about bonds over there. So it was somewhat of a positive experience there. I ended up basically going out there and starting to teach people after that how to trade the markets themselves. I actually can say that I did work on Wall Street. I did not work on the exchange floor, but I did walk past the New York Stock Exchange every single day going to work. I could see the bull right outside, and I used to go and have lunch and talk to floor traders all day. It was awesome. So again, got to kind of see what it was like on the inside world down there. And now, again, I help, present for Nadex. I have a company that I teach people how to trade, and then again with obviously kids. You guys know that the twins are now 11. The girl is now 3. She's only 1 there, and now there's a new boy. So who's 2 months old, and he's a handful already, but he's the one that looks like me the most. So I'm pretty excited about that. So with that said, let's just go right into the disclaimer so I can start talking about charts. You guys have heard this once or twice before, but again, this is Nadex's risk disclaimer. That trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost of another transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and none of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. All right, so here is our, here is our kind of agenda for today. All right, first things first, let's talk about news. We know that we do have, we know that we have the president speaking later on this afternoon, right? That's always a big piece. We know that we have crude oil tomorrow is always a big one. And then we have a really, really big number that's coming later on this week. So our really, really big news release that is coming later this week. So we got a lot, right, on a small week. Then we'll go and we'll dive into the indices. Like I said, the indices have had a lot of movement very, very fast. A lot of whipsaw, right? For any of you that are in the market, you know what whipsaw is. You know how that works. We'll see what you can do with it the rest of today. And then also we'll cover Forex. The pound is just on fire right now, particularly the pound yen. And a lot of that is having to do with the indice, the overall indice market in the United States. But again, so Forex has some pretty interesting kind of areas and setup. One of the things that I always get asked, particularly about currencies, again, we know for Christmas, the US stock market is closed down. The currency market actually is not closed for Christmas. The movement on it typically is not much, but it technically is not closed at Christmas. So, this year, obviously being on a Saturday, yes. But some of the holidays before and after, the days that are pegged as Christmas for the business world, they're still trading available on those days. And then commodities. So commodities, oil, gold, silver, natural gas, some decent movement there, although a lot of them are going to be a little bit more difficult to trade at this point. All right. 1 second. Let's see. Let's see. Having some issues here. 1 sec. All right. And that's it. So let's go across. Let's go right into the charts. Let's pull the chart up right here. Let's go across. So, all right. Sorry, I thought. Nope. Okay. I was getting a message and I was like, oh God, what does she want? You guys know occasionally my wife will message me and it's always like I gotta make sure that there's not like an emergency with 2 little ones downstairs. Sometimes I gotta be pulled away, but nope, she says I'm good. Okay. All right. So you can see in 24 hours, the bigger movers are out there are the ones associated with the yen. You can see the dollar yen 63, decent one. Pound yen 114. That's quite a big number. Again, big versus everything else. It's within 1 daily ATR. So again, nothing we're really worried about. But again, some great trading opportunity there in the pound, and we're seeing pound strength across the board. Pound dollar strength. Most of the dollar pairs had some strength coming into them, although they're a little mixed with the Aussie. Euro pound down 37, and again, that's a kind of a substantial amount there for that currency pair. So does provide some interesting opportunity as far as kind of thinking, all right, pound strong today, could we see a weak pound tomorrow? And you guys know how my belief on that one. I'm very big into looking for reversals, and especially after a large kind of out of the ordinary day, for lack of a better word. The data we had today from Canada kind of split. We're seeing the dollar CAD down about 9, but it's really, I wouldn't say it's kind of exploding. We already know on a technical basis it was up inside of a sell area, and it was kind of mixed. I mean, the 1.3, it's great. It's better than the 0.2. And again, it may be red because there was some positive revisions last time in the data. But besides that, we don't really have a whole lot here. I'll click it. Yeah, it's Biden's speech is not even popping up on here. I think Biden's speech today is going to be pretty important. I think it really kind of weighs into how severe or how serious Omicron actually is. I know whenever we look at the data, we're seeing hospitalizations go through the roof. We're not seeing deaths kind of go to the same rate, right? Or I guess positive tests are skyrocketing. So the severity of it is definitely something that we need to keep on the radar. And again, a lot of it's hypothetical. We know there are school systems closing down. They're canceling sports. Our neighbors in the North Canada, they've basically they've brought restaurants and bars back down to 50% capacity. So not a quote lockdown, but they're definitely starting to pull back. And remember, whenever we start talking about bars, restaurants, those kinds of things, the first thing you got to think about is services, right? Services is always something that's going to come up there. We're going to have to see what the services data looks like in January, but at this point, I think all the forecasts are going to be down. So that could actually throw kind of a monkey wrench into a lot of things out there. So, with that said, as far as the news front today, the only thing I would say that's not listed here that we need to watch out for is that API oil inventory report that'll come out at the close of business for the U.S. session, giving us kind of a foreshadow tomorrow for oil. Tomorrow morning, we have some final GDP numbers. I don't expect this to be off. Consumer confidence, I think, is going to be the one to watch tomorrow morning. It comes at 10 o'clock. It's expected to be better than it was before. But with a lot of the fears of Omicron and everything associated with it, is this number going to miss, and could that potentially give us a reversal in the overall positiveness in the markets? I would say it's got to be a little bit careful with it, I think. So, and again, right after that at 10:30 is when we have oil inventory. And again, oil's been kind of all over the place. We're floating around that 67 area again. I expect that there's going to be probably, I don't know, It's probably a good area to trade. I think the volume would be much, much lighter because it is a holiday week, kind of during this Christmas week. And again, I think so much right now depends on if it's a positive speech day for Omicron or a negative day. If it's a negative feeling day, again, that's showing you the demand is going to be down. If it's a positive day like today, it's nothing but a rally for oil. And the API report later on today is really kind of going to be our first sign of what that looks like, right? All right, so with that, Thursday, Thursday, Thursday is a weird day. It's really the last true business day. Christmas Eve, yeah, things are open, but at the same time, I mean, how many people are out there? I mean, the male population will all be on there trying to figure out if they can get Amazon delivered in time. GDP not so big of a deal, but this core PCE price, this is the big one. This is in a low volume environment, this could be a big mover. It's coming in at 0.4. If you look at its kind of history, it's not off too much, but again, another area of continued inflation. We'll see, right? We'll see. One of those. I would say if this comes in at higher at a 0.5, that could be pretty detrimental to the overall market. Omicron spiking kind of holds off taper a little bit, but if this comes in higher, the price that you and I are paying for goods and services, again, it's even more reason that they need to push the interest rates higher at a faster rate. There's a little danger in that. And think about it. Omicron, schools are going virtual. We're shutting stuff down again. And all of a sudden, what's going to happen? Man, we're raising interest rates on top of it. It's a cocktail for not a lovely time in the stock markets. I really do hope we don't get to hear all these. My 401k became a 201k joke again. But I feel like the environment, it's a genuine risk that we need to watch out for right now. And then 24th, obviously nothing. Obviously Saturday, nothing. Sunday, nothing. Monday, nothing, and then back into Tuesday, nothing. So we're going into that kind of holiday time frame. And again, we're not going to be meeting next week, but you can see even with everything out here, medium, high, even with low, next week is it's really, really small stuff, right? Nothing, nothing spectacular next week even. So again, we're not meeting next week, and there's literally one economic barometer released next week that makes any difference at all, and that's it, right? So we're rounding out the year at this point. So with that, let's go across and let's start talking about the indices. So we're going to start off talking about the VIX first, right? The VIX first and foremost, because again, the volatility index really tells us about what the indices should be doing. I would say 9.9 times out of 10. If you look at the VIX and see what color it is, it's typically the opposite of what all the indices will be for the day, right? Now, being down 6%, that seems like an amazing day. We should be blowing things out of the water. We should have the Dow up huge, and we do. The Dow is up 520 points today, right? So, after yesterday's huge spike, we're seeing it kind of, emotions kind of waning a little bit. Again, the VIX is, although it's a tradable asset, it's really a proxy of something else. So it's not, we're not looking at this and say, hey, listen, the VIX is going to spike. I would say this right now in anticipation, we're seeing kind of the volatility go down again. It's nice hearing that we're going to get aid, and I don't think we even saw that. Home sales, retail sales, lira. Again, we're gonna, deepening bilateral partnership, great. Omicron on the edge. Yeah, we're not even hearing it right now. So we don't even have the true data for what we're going to catch later from for Biden at this point. But one of the things I do know, the White House said they're going to deploy, 1,000 military medical personnel to support hospitals facing the surge this winter. So, yeah, that was a question I had my wife. Like, he's sending military personnel, but how many military medical personnel are there? Like, I was wondering what level, but there, problem solved, answer given. So with the VIX coming down, we're seeing everything roll. So let's take ES, let's drop it across down to 15, and let's see where our tradable sources were. This morning we were sitting, and again, I'll put it on here for you, right, 9 o'clock is right there, 8:45. That's where we were sitting this morning for the broadcast with Todd early on, the morning market movers. You can see that prices were pulling back. So the last couple of days, we have not had opportunities at the open. Unlike, today, absolutely without a doubt had an opportunity at the open. Price literally pulled back at 9:30, grabbed those sellers, and then drove down to the opposing zone, which obviously is marked off right here. Pretty simple, right? I mean, this is what we've talked about. The 15-minute opening trade setups definitely had it today. And again, it was an immediate short. We talked about Omicron, fear, everything we've talked about, pushed it down. And what we did, we found a clean area of buyers. This, not so much. Again, there's here. That's 3. So 4 would have broken. There was our takeoff point. And again, 10:30 in the morning. every week, every day I mention it. 10:30 in the morning is the area we're looking for reversals. That was our reversal for this morning. I would say right now we're in an area with a little bit of stickiness, but we got quite a bit of room to run. I would say we're probably got clean sailing till probably up in this area. So we got some more room for it to run. As I said, it's got a little bit of a hiccup here. It's a little bit of a gap, but we should, again, with the basing here, we should be able to continue forward. Hopefully, I say hopefully on this one. Hopefully, Biden says nothing too inflammatory that literally takes this market and crashes it. I would say seeing the surge the week before everybody's home for vacation, visiting family, I think is something to be concerned about. But it looks like they're trying to get ahead of this a little bit faster. And again, it could continue to provide us a little bit more of a bounce. But I would say it looks like right now we have smooth sailing up to 46, 45. Again, with two different trades, one short at the open, then a 10:30 reversal back again. It's slightly higher than where we opened. But again, with two trades already in this morning, I would say right now look for this to come up. And again, if we come up and stabilize in this area, I would say look for a potential reversal maybe tomorrow, right? Everything's positive today. We tend to see the opposite on the next day. So, yeah, I'd say watch that. Watch the level up here, 46, 45 area would be where we're looking for potential rollovers again. But again, wait trade it tomorrow morning. Look for this level of basing again. Perfect setup in the morning. We talked about it in the morning market movers. NQ had the same exact thing. Your 9 o'clock window is sitting right there's 9 o'clock right there. So again, we talked about being short, great overnight setup. Again, this was the European session driving it down. It was confirmed at 7:45 this morning, kind of gave us a little bit of a hiccup. And again, there was the open. You can see quite a push. Now, we did go through the 15,700. This black line is not an entry. This black line was really for really kind of basically a first target. Now, our second target would have been down here at 15,600. It didn't make it all the way down before it rallied, but at the same time, where did it turn? 10:30 in the morning. So, it's a level. We missed a little bit of entry on this one. I would say be cautious. We are in a level right now, but this level from its original establishment, really back here, we've had 1, 2. We're at this third hit, and there's a bounce below. This is one I'd actually be looking to go a little bit higher also. I would say right now for NQ, the next time sellers are coming in is at 15,900. I would look for this one probably to continue forward. Again, for traders at lunch, I expect it to slow down a little bit. But if we get a little bit of a pop and pullback, I think 15,800 is a decent bounce up to 15,900. YM, okay. Here's YM from yesterday. We were sitting here yesterday morning and we talked about a level down at 46,600. Again, psychological level. This one turned at 11. I missed it by 30 minutes, but it was the kind of the turning point for the Dow. Now the Dow has been able to go up. We had that old area of interest level and it kind of turned here and then turned again. And then the open was quite choppy. And it kind of based on the top. I would say right now, 15,500 is my target for today. If we can get up there though, actually, let me take this, bring it to here. I would watch out for this level because 15,500, it ends in a 5 and 2 zeros. 500 is a large psychological number. The fact that we have a tested level there, I'm kind of concerned about this one, that if, this pushes through and all of a sudden Biden comes in at 230 to here, right here, I'm afraid that this could be our result in the Dow. And again, I don't think he's going to mention anything about locking down, but, if there's any mention about restaurants, bars, curfews, capacity limits, I think that that's definitely going to hurt the Dow because, again, manufacturing, you're not going to need as many service or goods out there to purchase. It'll immediately hurt the service sector. And again, the market tries to foreshadow what's going to happen in the future. And again, we're up 508 points, right? So we're up big. If we hit this and turn back down again and we close it up 350 for the day, it's still a happy-go-lucky day, but there was a reversal that occurred in there. So I think be cautious about that one. Again, that level is sitting up here at approximately 35,478 is where it starts. The dotted line right here is 35,500. Russell. So Russell, again, positive day. You would expect the Russell to be up, and it is. It's up the most. It's up 2.5% right now. Big day on the Russell. One thing we had mentioned about the Russell is, again, this red dotted line. This was an old level. We had selling there, but it wasn't really anything we really wanted to take short because it had pushed it literally to the brink of the zone. Whoops, I didn't want to move that. Right there, I was moving this. And you can see It did hit it, push it to the brink, and pulled back again, but it was not a short entry for us. At this point, it's come up of his base in the level. I would say watch for sellers, and for Russell, probably up top. I mean, there may be a little hiccup there, but I would say Russell today, again, as long as it's not blown up, I would say that 22,900 or 19, right? 22.19 would be where my target is. Now, that's a really, really big day up. Like I said, Biden has the ability today to make some comment that the market does not like, asking people not to travel. We know from what we heard last night about, kind of the attack on the unvaccinated again. We'll see really kind of how it turns out. I don't know. I know multiple people that are triple boosted and very, very sick right now. So I don't know. I think they would disagree with his kind of stances. So who knows? But I think it's a level we need to watch out for. I think it becomes a target first at 22.19, but a potential reversal level. It's got a little bit room to run. 24 points is a lot of points to run from now in the next 2 hours. So it may look for something a little bit smaller, but I think it's a very, very similar setup to what we saw with the YM, where we have a level just sitting above where we need to respect. And again, being up the most, I think, again, anything negative, Russell being the strongest today could be the weakest tomorrow, just like it was the weakest yesterday. So it's something that you always need to watch out for. Okay. Now, with that said, let me flip across to the dollar real quick. You can see that the dollar is kind of pulling back up again. The dollar, if I extend this across, the same level that supported it yesterday, also supported it this morning at that 3 o'clock, 3:30 window for the Europeans. And then again, at 8:30 this morning, it became another rally point. So what we need to worry about with the dollar is, actually, let me change this to a 30-minute. There we go. The last time that, when price comes up into this range, just where we kind of bounced off of that 96.65, it's had some problems, right? It put a lower high in. It got checked here and got forced down. It just hit it and got forced back again. Again, 1030 reversal. Question is if, any talk about stabilization or that Omicron could be worse than expected or it's doubling and tripling. I mean, I think the current thing is every 2 to 3 days now it's been doubling in cases. That doesn't help the rising interest rates, scenario. It's probably due to roll back down unless Biden speaks and kind of messes something up, which again will affect all currencies right now that are associated with the dollar. So dollar index is more at the time to go weak dollar standpoint. All right. Starting with the Aussie dollar. Earlier this week, we had a level drawn out here. We talked about an aggressive entry at 71.46. We talked about the Fibonacci 50% retracement level. Now, this was drawn from, when did we start? On the 16th, and then the low was yesterday at 2 a.m. in the morning before we kind of stabilized in the Aussie dollar. We are rallying, and when I say rally, it's not a super strong rally. It's been kind of slowed down a little bit because of Aussie weakness. We're now within striking distance of that area. We're about 10 pips away. Again, it absolutely, without a doubt, could be up here for Biden. Again, 50% Fibonacci traders are going to love this level. I do have a level of basing in there. We already have one Harry Potter that came through that level. So there's a lot in there that we need to watch out for. I don't think that he's going to completely nuke the dollar today. I think the indices are probably more at risk. But again, with a weakening dollar right now, we're seeing this start to go up again. Any basing and pullback, and again, the U.S. traders at lunch right now, we could see this will roll back down again. And I don't think, let me see, do we have, let me go to today. Yeah, they have a leading index tonight, which is not big. Actually, 2 leading indexes that are not really huge. No Aussie data tomorrow. So yeah, Aussie is purely at this point, really, this is purely risk. This is nothing but the dollar right now. So again, Dixie is what's to watch, but I would say, watch for the potential reversal. It is a 50% fib level. It is an area where we had a Harry Potter before that went to full fruition. And again, on the downside, there's not really a whole lot in here that I'd be like, that's a great level to go long. So, yeah, we'll see where it goes. Aussie yen. Aussie yen also at a level. Now, Aussie yen, we had this level here, but again, this one is getting dinged. Literally 4 hits on both directions. 1 hit here, 2 hit here, 3 hit here, 4 is what broke it. 1 hit here, 2 hit here, 3 hit here. This one hit 4, and 5 is what broke it. And then it gave us the confirmation entry pull, basically the confirmation push through. We can actually adjust it a little bit. Actually, let's adjust this just a tad off this level, since that's where we got our push from. We'll do it from there. Actually, you know what? I can do the whole candle. It adjusted just slightly, but maybe gives us a little bit better of a target to the downside. I would say we need to watch out. Okay. Aussie at 81.53, the last time we were here, acted as an area of sellers. We're now approaching that same level now. It is 12:30. We start to kind of slow down when a U.S. trader steps online and says, hey, hey, hey. Again, this has exposure to the yen. It's just another area where, again, Aussie yen setup down, Aussie dollar setup also has an area of sellers above. So kind of a, two Aussie-based positions that are kind of in a similar scenario. As far as fib-wise goes on that one, if you guys want to see fibs on it, I can draw them out there. You can see that 81.53 is a 61.8. Typically, I prefer drawing them off the 50s, not the 61s, but there are people that will be like, no, 61.8, 61.8. There's your 61.8 level. Again, I would say this is a little aggressive. We could use the top, but either way, they're both at an area now where we could have potential reversals back to the downside. Okay. Euro pound. So we talked about Euro pound pushing back. All right. So Euro pound, we've had this level, this 85.45. It's been here for a while. It was a great short over here. It hit it and it's pushed down. It hit it again and pushed down. It hit it again and obviously pushed down again. Here, I'll throw this on here. You can see how many times it has now hit this level. 1 to 3 target is sitting right there. So you can see out there, and it's continuing to push lower. So right now, what I think is important to look at, again, 85.45, 85.50 on the bottom. If we're going to run some fibs on this one, I would say we technically we should use this level, but we're gonna grab it this way. We are at a 50%. So again, it's an area that we need to watch out for a potential reversal. We do have a level of basing sitting right there, and we're coming off of it. So for those of you that need to get a European-based trade in, it's at a fib level. It just hit it and is pulling back again. It hasn't given us the really kind of the correct confirmation bounce, but both the European and the pound markets are closed. We've seen nothing but basically down. I mean, the European open was here, right there. So we've had one direction in this pair, right? So there will be profit taking, and I would expect that, again, the pound probably slows and turns. The UK in general has been quite at risk for Omicron. They've had, they were the first one to have an official Omicron death. And they got some issues over there with Omicron. They seem like they, as far as countries go, thus far, they seem like they've had the biggest issues. So I would say that it's probably due for some type of reversal. We'll only have one news headline. And again, if you like your fibs, this one is a confirmed fib with a supply level. With a demand level, right at a 50% retracement level with a 61.8 is a stop loss, which happens to be another level. So, nice reversal there. Now, that was basically pound strength. On this side, we have European strength. And again, this is not so much the euro, it's more the yen, right? We're seeing the yen rally here up to a level. We're seeing the euro yen do the same rally. Again, the last time the price was up at 128.65, we had some selling. It is between the 50 and the 61.8. It is not the extreme range. It is the aggressive of the two. But again, it's two charts with almost the same exact technical drawing done where we are rallying into an area where there were sellers before. They both involve the yen. Right now being at 12.30, a lot of the yen strength is out to lunch in New York. It will come back in the next half hour. Could it be time to reverse this back to the downside? Maybe, maybe not. But two setups. Like I said, I don't think, I wouldn't say that, the Japanese yen is golden. It did have good data today. There was data. Where is it? Where is it down here? There was actually, where is it? There was actually good data from Japan. It was the first time they had an upgrade in like 17 months in their economy. So there was actually some legitimate good news. I just had it here. Oh yeah, Japan upgrades economy for first time in 17 months despite Omicron. So again, they are getting a little bit of a help, but I would say it's probably more indice based. With the U.S. indices up as big as they are, with the Dow particularly up 1.5%, this is the yen sucking this forward right now. So again, same picture. Aussie yen, euro yen are more or less the same. Euro dollar, you can see, is not going up; it's going down. So, yeah. Unfortunately, we have an entry on this one for 130.75. It missed it by just a little bit here, missed it by a little bit here again, and missed it by a third time a little bit. It's hit the profit target. Again, it bounced off of it here, hit it and bounced here, and now it's kind of using it as kind of a Harry Potter. I would say right now the range for me on this one is still this 113.07 and then the 112.35 to the downside. We're kind of sitting right in the middle. There's some buyers in here. It is more due for a reversal, but I think there's better opportunity. I would say this 112.35 level, if you know how to set alerts, I would set an alert actually a little bit above and put it right here. Okay. This is a green bottom here that was on December 19th. I don't know if you guys can see it. It was basically a drop, a 2-candle bottom, and then a pop. It did get front run by a little bit, which is fine off our zone because there's an area sitting right there. So if you do know how to set an alert, I think this level right here would be a great alert to set. And again, you can name it whatever you want. This is Euro USD reversal. Let's do Rev. Set an alert right there. And the reason why I'd want to be alerted by that level is because again, we've had the front run in there before. I think it's a good reversal level for, again, dollar weakness to come in, European strength to come in, and you can see there's a bunch of data. It may not trigger today, and most likely it won't. Let's say it is about 36 pips away. It's probably at least a day, and tomorrow I see being flat. But for PCE, this is absolutely an area that we could be using, okay? And again, we may come down. The data over here is, weekly API stuff. I'm not really concerned about that. Any of this data could be a potential level. I would probably, I would like to be, for the PCE data, I would like to be short the euro dollar because I do think it brings dollar strength into the market, seeing that continued inflation. So that's also why I'm keeping this level up top, right? So right now, these are kind of my tops and bottoms for the market. We're sitting right at the 50% mark. PCE is going to be extremely important, and that PCE is sitting right in here, right? It'll occur 8:30 right there. So I'm kind of watching, let's see, news here, okay, for later in the week. But right now I need to kind of come either way. Like I said, I'd like it to be up here. I would love to get short before PCE. And again, maybe we come down to here tomorrow, we bring back up again, and then again push down. Kind of one of these, right? Where we see news down, we see dollar weakness, news up, and then we see the weakness back down again. Make sense? All right. Pound yen. Just like all the others, like the Aussie yen, the euro yen, we are seeing the pound yen also rallying higher with that Japanese weakness. The yen weakness, not Japan. So we're at a level now. Again, it's close. This one I could adjust a little bit. We could talk about how it was a tested level and kind of front run there. It's probably a little bit higher, but kind of the same thinking on this one. Again, we're rallying higher on this one. Just because the Aussie yen, the euro yen, and now the pound yen are all in the same area. You can see the confirmation through this entry, the 50.64. I like this 50.64, but not for a long, right? I like this, and again, we'll refine it just to make it a little bit easier. I actually like this 150. Actually, it's 160.54. I like this. If we can get a break of this level, I like this for a short. Right now, I'm looking for this to come a bit higher. And again, it's the same trade setup, looking for a bounce of that one, push back to the downside. I think it's a decent level. It is a little bit more risk than the other two, unfortunately. Yeah, 1 to 3 is right there, right? Let's put this, I have an alert right there. Oh, it's a 50%. We'll leave it there. Save is fine. Yeah. Same trade setup, not really a whole lot different. Right now you can see the fibs are drawn on there. This 50, the 150, I'm sorry, 150.54 was a 50% fib level. It started the base in there, which kind of eliminated that one as a reversal level. But I do think because, again, we had a lot of time spent there, it's a level that fib traders have watched at this point, and now it's a failure. I think instead of this one being now a buy on the pullback, I think this is an entry for us to come down, have the same level of basing that we got here, and then look for a push. And in reality, for those of you that know the Harry Potter, here's the level. It was the 50% retracement level. We had an original short there, but then it came up and started the base in the level. Well, look what it did. It punched higher, it pulled back, and then it took off. And I have it over so you guys can see it. But there's the lightning bolt, right? There's the lightning bolt pattern we're looking like. When a level breaks, we're looking for a base above, a pullback, and then that becomes the level of risk. So again, there was the same long target for earlier today. This one triggered at about 10 o'clock, so it was definitely something you guys could have grabbed. And it's had decent movement, although it's slowing. And again, slowing, at least, especially during the lunchtime hours. I look for the reversal of 150, 154. Okay. Pound dollar. Now, pound dollar, we saw euro dollar really pushing. Pound dollar, not so much. Okay, so we had a Harry Potter here. We talked about another, and it kind of got another entry in, and we talked about it dropping, but it really kind of pushed, and then it just kind of stagnated, right? European session started right around here. They got an initial push up, but we're kind of in the same area. It really hasn't pushed back and forth either way. Again, this is one of those ones. Let's see. Let's shrink this a little bit, make it easier to draw. Based off of fibs, you can see that it really hasn't done much. It's gotten stuck in kind of a lot of these hiccups. If I do use the full kind of level, right, you can see that the 50 is kind of what it went off of. Again, I'm using the old kind of demand area where price, again, most fib traders are going to be like, wait a second, you're supposed to use here. Yeah, I know, but this is kind of what I'm using as my top and bottom right now. So you can see it's bouncing, but I don't really love it. I would say if I had to pick a direction, yeah, I am more bearish in the position. There could be a case. I mean, again, hindsight is 20/20. I've had this level drawn forever, but you could say, well, wait a second, Brian, there's a level sitting right there, right? There's a level sitting right there. It's basing in it, and that's a 50%. Why don't I go short? I would say, yeah, it kind of does make sense. Again, short here is strong US dollar to the downside. It is pound in a selling position. Pound is also getting close to a selling position here. So just like we have the yen flexed over a couple different pairs, the pound is also kind of flexed over a few different pairs, which again, when you tend to have that overlap, tends to provide the opportunity for reversals. So I would say it's there. I think there's a little bit better opportunity, maybe stretching a little bit, but again, it is a holiday week. And a 1 to 3 on the short is really, this one really doesn't move that far. The 1 to 3 is only right there, which is, you guys can see it basically eliminates the spike from the open. European open was right here, right? European open's here. So if we come back down, the profit target literally brings us to where we were. Okay, so lots of news over the next 2 days on this one, though. So again, I think there's plenty of potential for this one to kind of come back falling down. Dollar CAD. So we're still in the same sell area. Again, we have an alert in a Harry Potter short, much, much lower. Yesterday morning at this time, we were sitting right here. So let's see, in 24 hours, this one is 9 pips off. Not really a lot we can trade with this one. A lot of this one also has to do with oil. Oil's up 2.8%. Kind of hard for this one. I mean, and again, oil's up huge. So we should have strong CAD numbers. Nothing. So it's strong CAD versus strong dollar in this position. And again, it's not being drug around right now. But I would say I am more bearish the dollar CAD. I do think it comes back down again. This is a larger time frame level. It's been pushed through. I don't really have a great entry, but I would say look for shorts up in here on the dollar CAD, particularly with oil where it is. And like I said, oil's up 3% today. 71 is a big number. Again, OPEC loves it up this high. We're not seeing any kind of news, right? We're not seeing anything out here really about it. Considering Omicron's locking things down, retail sales are not great. UK debt costs, the fastest spike since 2010 inflation. That's why the pound is moving. I don't see anything over here. All we talk about is retail sales, supply chain issues, issues. So I would say look for a short entry in the dollar CAD. I don't really have a great one that I love on this one though right now. Okay, dollar Swiss. So dollar Swiss did the 50, came back down again, and then punched higher. We're in the same level. Again, it's been hit 1, 2, 3. This is hit number 4. I don't like the 4th hit to be able to go short again in there. I will say I do love how there's nothing up here. So again, this is the case of the reversal at this point, or not reversal, but a continuation pattern higher. 1 to 3 is right there. That's 2.99. So again, Harry Potter lightning to the top. I forget what side is my lightning. My lightning is, where is it? I think it was my top side lightning, right? I can't find it now. Oh, it's right there. No, lightning is down. Okay, so I need like a reversal function now. Anyway, this one would be a break above 92.57. Right, and again, we need the confirmation entry in. The target is going to be up top here at 92.82, but you can see we really have kind of clear running till probably at least that level right there. So again, plenty of room to get a 1 to 3 base trade in. The risk on this one is really not that much. We're only talking about 8 pips worth of risk on it. So decent level. And the reason we're taking it is because, again, push it to the brink, great move, hit it again. So 1, 2, 3, this is hit number 4, and we're basing right below. That typically gives it an area to fall back to be able to go higher. So a break of 92.57 with an eventual target up at 92.81. Dollar yen, look at that. It looks just like the other ones, right? Rally against the yen, Aussie yen, euro yen, pound yen, dollar yen. Now, this one, there were so many hits off this 50%. We hit it here, we hit it here, we hit it here. Number 4 actually hit it again. Number 5 is what based in there and pulled it back. And then again, we based and finally broke through on 6. Again, once it cleared this level, it was off to the races. Again, just like that dollar Swiss, racetrack scenario. Now, we're messing with all this. Now, you had a high here, a lower high, a lower high, and a lower high. Okay, it's got to chunk through really this entire area here. It's a lot to go through. It's 3 separate levels. There's a bunch of sellers. It's kind of extended at this point. I would say it's probably in the same scenario as the Aussie yen, euro yen, pound yen. The problem that I have with this one is right now, the way that we're set up, we're looking at dollar strength in a few different currency pairs. We're already pushing the top, and this is obviously not the freshest of levels. It's eaten orders away a couple different times up here. And in reality, here, I'll bring it back to an hour. We'll do a 2 hour or 3 hour, I guess it is. If we break through this level here, look at the racetrack, right? Look at the racetrack. So actually, I think on an hour, even on an hourly, it's decent. Yeah. So even on the hourly basis, if we break through where we are right now, I would say the first hiccup of sellers is really coming in there, right? The zone looks something like that. If we bring it across, that's where the potential is. Now, question is, do we have enough to take that for long? Maybe. Let's see. 1, 2, and 3. We do actually. So the same lightning bolt trade I just talked about, we have another potential setup here. And again, profit at 114.65 with, again, a confirmation entry breaking above 114.28. Okay. So again, kind of the same scenario as we're seeing here. And again, just like there was 2 pound setups, again, also 2 kind of Harry Potter based trades. This one's a little bit farther back to see, but 2 same trade setups for the dollar. And again, dollar index, it pushed up, it pulled back, and now it's stabilizing itself. This could lead us for that next push through and for the dollar index. If we can break through this level, again, same trade setup going up to 96. So kind of seeing it on 3 separate charts. Same trade, 3 separate charts. Okay. Let's go over and let's talk about the big boys right now, right? So interestingly enough, we kind of chopped through and had a little bit of, I would say, a little bit of drama around filling this gap, right, at the 61.8. It punched through, pulled back, and it's like, yeah, it's breaking, right? So it is now broken through. Oil is up $2 today, which is, again, that's normal. 226 is typically what we're looking for right now. 830, actually, this needs to be adjusted a little bit. Let's see, 830 to 430 right there. This needs to be 830. One more. There's 830. There's the high. So again, up, and sellers coming in. There are some sellers over here. I would say there's a potential level sitting probably right there, right around the 78.6 to that one. I could actually take this and refine this a little bit more and bring it down to here, right? Again, lower wick, nice explosion to the downside. So we're kind of in a potential, and again, I'm wondering if this is going to be a profit-taking area. Again, U.S. traders are out to lunch right now, but up 2% right now. Ooh. Or up $2, up 3% right now. Very interesting level, because again, if Biden is going to speak and mentions anything about, again, canceling plans, I mean, God, if he makes any recommendations about don't have gatherings over Christmas, right? Again, all those things are weak demand based news at 2:30. I'm wondering if we try to figure out how to take this short. Again, looking for a potential top in there. Again, a couple different levels, but I'm wondering if this is one of those trade setups where we look to figure out something. Again, there are different products that you can trade after oil, after the futures market closes early, right? Very interesting setup. I may have to. This is one of those ones. If this level is holding, right? If this level is holding and has not broken by the time Biden speaks, I actually wouldn't be surprised if this turns. Again, 230 would be coming in right there. I wouldn't be surprised if that one turns and rolls back to the downside. Here's why. Again, strong push up, very strong push up. It is not a news day, right? It is not a news-based day right now. Inventories come in tomorrow. We know that he's going to talk about home, we can't get home test kits. We're going to send them out to everybody. COVID rates are doubling every 2 days. They're doubling with Omicron. 75% of U.S. cases are now Omicron as well. Boosters are only 20% of the entire U.S. population is actually boosted at this point, which kind of surprised me, but I found that out yesterday. Jim Cramer has COVID. Symptoms are mild, but Cramer has COVID. Larry Hogan from Maryland, he's got COVID. So even these big names that are, the supposed leaders out there are still getting COVID. So yeah, I mean, he mentions lockdown, don't travel, don't see people, always wear a mask, gloom and doom. That should probably hurt oil. And again, $2 move, 3% is a little bit high in one day with no news releases. This could be the potential for profit taking to come in and kind of drop back down again. So oil traders out there could be a little, nice little setup there. And again, natural gas was flying, and now natural gas is only at 0.42%. So natural gas has really been kind of stuck in this channel. We've kind of talked about this for a few days. The upper side of the channel is sitting right here. This is what we've just bounced off of. Lower side of the channel is down here. Really the $4 and the 360-ish range. That 40-cent range has literally been bouncing back and forth again. Natural gas is up, but I wouldn't say that natural gas is probably a flyer. I don't think I'd be shorting natural gas right now. I think natural gas, while oil stands to kind of take a fall, more people home means more demand for natural gas. So I would say natural gas probably finds a bottom, and I'd be looking for a breakout on the top side of this. Again, natural gas traders, a break of $4, because again, 398 is the top. Look for this one to go up into the 415 range. Okay. Now gold. We talked about 1800 earlier in the morning market movers. I did get an email, so maybe I should adjust. I should talk about this. Okay. 1800. I got asked why did I draw a line at 1800? Okay. The reason why I drew a line at 1800 is because 1800 is a large psychological number. You may say, what's psychological about 1800? The fact that it has double zeros in there. Okay. Things like 35,000 or 36,000 inside of the Dow, right? We're getting close to that 35,000. It will react as a very, very big level. Like 40 will be even bigger whenever we get up there. For the Russell, it was 2,000, and then it's like, wow, we broke 2,000, right? Like the ES, 5,000 will be a huge number, okay? 1,800 is not as strong as a number as 2,000 will be, or 1,500. But once we broke through 1,500, the next thing people talked about was we're going to hit 2,000 next. 1,800 has been a very big psychological number for gold throughout the pandemic, okay? We have record inflation right now, 39-year highs, and we're having a hard time breaking through 1,800. Now, it's only down 0.19 today. It's down $3. Doesn't look like a huge change. And that's kind of what we've seen, okay? Where we're at right now, again, with high interest rates, talking about crushing interest rates, gold wasn't the go-to in this, I would say, crisis, right? It was not the go-to to hedge for inflation, okay? The cryptos this time seem to pick up that role. Right now, the cryptos are up about 3%, but they're still below that $50,000 magical number right now. And again, 3.5, they're supposed to be at 100,000. They're supposed to be over double what they are right now in the next 10 days. Okay, it needs a double in price to fulfill all these expectations that all these people out there chimed up. Okay, gold though, again, Gold has been more the institutional hedge for this, and is having issues with 1800. So I would say right now, again, we talked about this one breaking through. We didn't really get, I mean, we got kind of a Harry Potter. We kind of got a clean break. It didn't push all the way down again. It went back up and used 1800. I would say, although this is definitely an area where we could see buyers coming in, this 1782, if this starts to base and starts to chop sideways through this level, I think we need to start targeting this. Okay. There is a Harry Potter base trade from the 15th that sent this higher into a level of basing. And again, there's almost kind of like a 2 Harry Potter setup here. There's this level kind of sitting right here is kind of number 2, right? But what we're looking to do is capture this entire bit worth of movement. Okay. So I think a base in this level kind of, and again, the short could come in either location. It could come with a break of what? Basically 1780, right? The secondary one I would say is probably here. And again, it pushed it to the very, very brink. So I think there are 2 potential setups in here. And again, the reason why I'm spending a little bit extra time on this is because with this number coming in, oops, I don't know, let me get rid of all the yellows. This core PCE price is supposed to come in at 0.4. What if this comes in at 0.3, right? And again, most of the time they get it right. Most of the time they get it right. But what if this comes in as a 0.3? Now, again, if it comes in at 0.4, we already know that. We already expect that. That's what's expected to come in, right? A 0.4. It was 0.2. They're expecting a huge jump. What if this is an overzealous projection? Lower inflation coming in should send gold tumbling a bit, right? So I think there's a viable setup here at 1780, 17. Basically, it's basically this. 1780, 1775, which again, also psychological level being a quarter, right? So gold's kind of set up that way. Silver, again, silver was spiking higher, and you know, look at silver's like, oh, it's up 0.9. Yeah, but it's pulled back from 730 down to 11, and it's really starting to kind of retrace back lower. Yesterday, how we talked about how we saw this in kind of inside of a pattern. We knew we were going to have some issues here. We wanted to see some basing. We were really looking for a break of 22, right? We were looking for a break of 22. I'll make this a little easier to see. That's what we were looking for. It ended up kind of going through sideways, and as soon as people saw the break of the channel, it was like, yep, off to the races. Shot it back up again, but we're really starting to push lower. Now, I will say, if you're going to run fibs from, whoops, not that one. If you're going to run fibs on this one from just the bottom push to the top, you can see that it's had some issues here. It did come to the 61.8. There are some buyers sitting right here. So this is kind of the, I think it needs to get through. If it can break through the buyers here at 22.38, I think we come down and we touch 22. It's the same, it's almost the same picture. Gold looking for this Harry Potter retracement, right? Silver also has the same type of setup here. We just need to break through. Again, those channel traders that were following this trend down, they got busted out on the top side. But I'm gonna actually, I'll do one up on this one. Let's see, Bollinger Bands. Look at how consistent this channel has been. Obviously the spike. Look how consistent the channel was, and look how far this spread, look how big. Again, this is how you know there's a statistical kind of imbalance here. That's what the spread, that's what the channel width is, but the normal channel is only this wide. So if this is the normal channel and this is the extended channel, again, we've already pushed through and we're kind of probing. We pushed through the mean and we're pushing the bottom side. This should collapse very, very fast on itself. You can see how much movement this was on little news. And gold, which is tends to be the leader, yeah, it's spread out, but it's starting to kind of, again, when these two shrink, it should shrink much farther down here as the moving average comes lower. So neither one of them has really like a rosy characteristic to them right now. And again, anybody that was trading these fibs, the level's a little bit lower, and the fact that we're breaking through the 50, breaking through and touching the 61.8 because the buyers are here, most fib-based traders are going to start dumping these two because they're going to get stopped out on the 50, which they already did because it hit the 61.8. The 61.8 traders, if it comes back down to grab these buyers lower, will also be stopped out. So it will remove the fib strategy. Again, no confirmations. as we start to push back to the downside. And again, I think we come back into play over here. So, again, seeing moves that are, again, more than what is normal right now, I think are a big thing to take into these two. And again, that PCE with low volume, I think both of them establish great little trade setups. Okay. Other things out there that I think we need to bring up as well. Bonds from that selling point, bonds have done nothing but kind of rally lower, but we do have an area and a gap right there with bonds. Again, approaching bonds, stock market goes down, bonds tend to move up. So this moves just a little bit further. Again, when we need to take a risk off, oh my God, I mean, Omicron, it's bad, right? Again, this gets just a little bit lower for bonds. We could have a nice little rally off that for tomorrow. Again, expect TLT to retrace up, stock market to go down. And again, the cryptos, again, same thing. There was a channel there. Once we bust through the top side of that channel, again, there was a quick pullback and off to the races. It looks very similar to what we saw in silver. So, but what did Bitcoin do? Bitcoin hit the same level up top, right? Same kind of, same channel right there. And where are we? We're in the upper part of that channel where sellers have come in as well. And again, big day today and Bitcoin up 3%. But just like I drew it in the other two, there is this level right here of basing, right there. And what happens when we do after that? We have a big rally in price from, 11 o'clock p.m. is when this rally came in. So, is there a potential short here? And again, not that I'm necessarily trading this one, right? But we have TLT at the bottom, a reversal. We have the dollar at an area with the same thing. Gold and silver are also in an area where they start to pull back down again. If money comes out because risk is off, TLT goes up, Bitcoin, gold, silver all tend to go down, as well as the indices. So this is down big. The other ones are up big. Another opportunity to get a short here. So kind of just throwing a little bit extra in there, right? So I think 230 is very, very important. VIX is still dropping, but we know we have some buying coming back in there. And again, indices are still pushing up. Look at this. There's your bottom. That's what we were looking for, that pullback. Now, all we need is one green candle. It's almost 1 o'clock. One green push through. Again, dollar index is coming higher. So, and again, oil is continuing to, oil has got to hold. It's got to hold for another hour. And we'll see if we can hold that candle to take that short. So, yeah. A lot of stuff going on today. But that's December trading. If you guys are unfamiliar with December trading, this is what happens. It happens all the time. So with that said, that's it for today. Now we won't have a Tuesday session again for Nadex until January 4th. Wow, 2022, and we're still dealing with COVID-19. It's crazy when you hear that. But the next session that we'll have at noon, that would be January 4th. Whew, January 4th. New Year's is almost here. Can't believe we're at the end of December already. But that's it. If you guys have any questions, I told you I would give my email address. You're more than welcome to email me any questions. You guys can grab the website. You can catch me on Twitch or some of the other platforms out there. I just actually started also over at ShareVision. You can email me, support@keeptradingsimple.com, or check me out on YouTube. But again, that's it for today. Wanted to wish everybody a very, very happy holiday, whatever holiday you're celebrating. Enjoy time with your family. Again, be cautious out there. And with that said, thank you so much for joining me in 2021. I look forward to having an even better 2022. And hopefully you guys all join me on that journey as well. You guys take care. Have a good one. And I'll catch you soon.